This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, November 26, 2015. Euro dollar. So the euro remains under pressure with the market closing in on retest of that multi-year low from March at 104.62. At this point, any rally should continue to be very well capped despite some oversold studies, with the market seen well capped into some previous support now turn resistance in the 108 area. Ultimately, at this point, only back above 110 would really compromise the immediate bearish outlook for the euro. Sterling dollar. So cable continues to trade off those 2015 highs at 159.30, with the market clearly putting in a series of lower tops and lower lows. At this point, a fresh lower top is now sought out by that recent high at 153.36 to be confirmed on a break below 150.27, which would open the door for the next downside extension towards the 2015 low at 145.66. At this point, only back above that recent high at 153.36 would compromise the immediate bearish outlook. Dollar yen. So dollar yen continues to stall out, with the market having a hard time establishing above the 78.6 Fib retracement off of the 2015 multi-year high to August low move. At this point, look for a break below 122.20 to confirm and open the door for an acceleration of declines back down into the 120 area. At this point, only back above that 78.6 Fib retracement around 123.75 would negate the newly adopted bearish outlook. Euro Swiss. So not much going on with the Euro Swiss as the market continues to trade within a very tight consolidation over the past several months, though overall the recovery structure remains intact and the market is favored to eventually trade back above the September peak at 110.50 and towards 112 further up. At this point, only back below 107.14 would compromise this outlook. Aussie dollar. So despite Aussie gains over the past several sessions, the market should continue to be very well capped below recent highs at 73.82, where a lower top is sought out ahead of the next major downside extension below those recent multi-year lows at 69.08. At this point, only back above 73.82 would compromise the immediate bearish outlook. Dollar CAD. So dollar CAD has seen some setbacks in recent trade, though these setbacks should continue to be very well supportive, with the market in a highly constructive uptrend over the past several months. At this point, any setback should be very well supported into the 130 area, while ultimately only below 128 would compromise the bullish outlook. Really look for an eventual retest of that recent 11-year high from September at 134.57, with a break to expose a move towards 140 further up. Kiwi dollar. So Kiwi has seen a bit of a bounce in recent trade, though overall the market remains confined to a broader downtrend, and as such, any rally should continue to be very well capped. Look for that recent high up around the 69 area to act as a medium-term lower top, and with any rallies therefore towards that level to be well capped ahead of the next downside extension back towards and eventually below the August multi-year low in the 62 area. SPX 500. So the S&P 500 has stalled out from this latest recovery rally around the 2000 area, although the market could be poised for additional gains if it breaks above that recent high going back to early November at 2117. 2117 is either going to be a level that is broken, which exposes a retest of the record high from May at 2137, or we stall out ahead of 2117 now and trade lower back below 2003 to confirm the potential formation of a lower top and acceleration of declines. In the short term, key support comes in by that 2068 low from the 24th of November, and a break below will be required to officially alleviate immediate topside pressure. Gold. So gold has been consolidating off recent multi-year lows at 1065, and the market is looking a little bit overextended, which could suggest a bit of a bounce in the sessions ahead. But the market will need to establish back above 1100 to take the immediate pressure off the downside. Otherwise, we could see this as a bearish consolidation ahead of the next major downside extension towards those major psychological barriers at 1000.